So you mentioned some of the sectors that have been affected by this higher for interest rate and also global market risk. Now I would like to ask specifically about the sectors. What's your opinion and what's your analysis from the S&Ps about technological sectors for Indonesia and also corporations in technological sectors in Indonesia?
Sure. So higher interest rates are definitely having an impact on them. The first one is it's more difficult for these companies to get funding. We were discussing just before the break the fact that banks and capital markets are very selective in extending funding to companies. Technology companies, by definition, they have to invest in technology, in infrastructure, in logistics. They are very capital-intensive industries. So when interest rates are going up, it's becoming more expensive to obtain funding when companies can obtain them. So that's the first aspect. And then the second aspect is back to what we were discussing as well. Indonesia has been so attractive as an investment destination by so many companies for the past 15 years or so, because of the population growth, because of the population age, because of disposable income rising and so on, that you have had so much competition in this market. And this is what is happening today. The consumer sentiment is less favorable than it was a couple of years ago. Yeah. You have many technology companies competing for the same customers, and what they have to do is they have to do discounts, they have to acquire those customers and keep them at a much higher cost than before. So it's really these two aspects that are very challenging for those technology companies. Yeah.
Okay. For banking sectors, the Central Bank of Indonesia just recently also increasing their interest rate to 6.25%, and is just adjusting what the Federal Reserve has done. How do you see the fundamentals of banking industry in Indonesia, and how do you see it affect your views and analysis on corporate ratings for bankings in Indonesia?
Yeah, it's very interesting. So that rate hike wasn't expected by most economists.
Yeah,
so it came as a bit of a surprise. So to set the scene, banks in Indonesia are very well capitalized. So they have a lot of capital buffers, and they are very profitable as well. Because they charge a big interest rate, and the cost of the deposit is not that high. So today, the interest rates rising is going to have two effects. Number one is going to make it more expensive for companies to borrow, and some of them will have to pay higher on their debts. So what you could see is more companies falling into challenges in repaying their debts. So that's bad for the banks.
Yeah.
The second aspect is when you put your money to a bank and the interest rates are rising, the bank will generally give you a bit more for your saving. So that's a cost to the bank. That's also going to compress a little bit the profitability of the banks. But it's only 25 basis points, 50 basis points. It's not really going to make that much of a difference. But if you start seeing a trend of much more aggressive rate hikes for whatever reason.
Yeah, that would be
maybe to defend the currency, maybe to defend inflation, bring down inflation if it persists, then this is where the impact on the bank is going to be a lot more significant.
Okay. Specifically on bankings in Indonesia, the big banks, as you said before, have a great fundamentals, such as the state-owned enterprises bank, which have a lot of cash reserve, very, very ample liquidity and so on. But we also have this segment in Indonesia, the small banks, the capital, we call it first capital, with a little amount of capitals, the provincial banks and so on. How do you see this? Yeah, that's true. Digital bank and so on. How do you see the interest rate high also affecting this bank and also the corporate ratings?
Yeah, it's going to affect them a lot more. Why? Because one, they have less pricing power with their borrowers, so it's very difficult for them to pass on the higher cost of the funding to the customers. And second, their cost of funding is a lot higher than for the bigger banks. If you are a BCA or if you are a Mandiri or if you are one of the very large state-owned banks, you benefit from much cheaper source of funds. Depositors will lend you money for less, and you can borrow money in the capital markets for less. If you're a very small bank, your cost of funding is already higher. So you are squeezed even more between the customer that probably is not going to pay for much higher rates and your own cost of funding, which is going up. So you have this polarization in the banks, which is going to make those high more painful for them.
Okay, that's for banking industry. And last one, I need to see and also know your analysis on consumer sectors, the retail sectors. We have this new government will be boarding in this October 20. How do you see this this government will also affect, the consumer industries in Indonesia, and also your point of view about consumer ratings for customers or retail industry in Indonesia?
So, see, this is a sector that in Indonesia should be growing very fast. Why? Because disposable incomes are low but rising. Population growth is significant, and the population age dynamic is very young, and young people tend to spend more than older people. But this is not something that we've seen in the sector for many years because of the competition, as I mentioned.
Too much supply.
Because there is too much supply, there is too much competition, the cost of operation is very high. So salaries are going up, rents are going up, electricity prices are going up for the companies. So and retail has also been very substituted by the technology. We were speaking about the technology sector before. A lot of the retail that was brick and mortar has gone on the cloud, online. So that's actually created a lot of trouble for the retailing sector. Will the new administration change anything? Our base case is no, because consumer-related sectors, retail, small consumer goods, textile, and so on, in the previous political changes that have happened in Indonesia, they were not very influenced by the economic policies. The sectors that were most influenced is commodities, energy, raw materials, palm oil, those big, very strategic sectors. Domestic consumption is doing okay in Indonesia. And there's very little that the government can do unless you have a massive tax cut to stimulate the spending, or you have a massive improvement in growth that makes the consumer much more comfortable.
Okay.
We don't expect either to happen. Yeah.
Okay. And in conclusion, how do you see the Indonesia's corporate fundamentals compared to the other probably peer Southeast Asian countries, and how do you see our challenge and our opportunities going forward?
So if I were to compare with the rest of the region, Indonesia has, I would say, a lot more hidden potential for growth. The population is the biggest, obviously, in ASEAN. But the challenge that Indonesian corporate sector face, oversupply, higher cost of operations, higher funding costs as well, they are faced by the other sectors in Vietnam, in Thailand, in the Philippines. So this new administration, I think, is not going to change much, at least for those consumer-facing sectors. But when you think about how the country has transformed in the past decade, with much technological innovation, the development of these technology companies, there's a lot of potential and opportunities ahead, regardless of the political setting.
Okay, regardless of the political setting, but internally, domestically, we have to make a more robust environment for Indonesia and also Indonesia's economy thriving in this economic global challenge.
Yeah, absolutely. One of the, and maybe I can conclude on that, one of the master worlds of the new administration is trying to be self-sufficient in a lot of sectors, in energy, in power, and so on. One of the aspects that seems to be missing to me is the self-sufficiency in funding. Indonesia, as a country, is still very reliant on US dollars. The government borrows in US dollars, a lot of companies borrow in US dollars, and so on. Capital markets are not very deep yet. And deepening them is going to solve a lot of problems on the currency volatility, on the cost of funding, on the access of funding to some of the smaller companies. And achieving that is going to be of huge benefit to the corporate sector in Indonesia.
So